Hey there, are you tired of blowing that forex account? Are you tired of blowing that profit account? Little worries, I got you. I've created a 95% triangular pattern strategy. This strategy works like magic if you are ready to follow everything I'm going to tell you in this video step by step. You are not going to blow your account after watching this video. I can guarantee you that. If you want to find out how, let's get started. So guys, I'm on the USD JPY, and this strategy, I'm going to make it to be as simple as possible. So first thing you need to identify, I'm on the 1 hour time frame, but this strategy works better on higher time frame. The minimum time frame you can go to is the 15 minutes. You understand? The 15 minutes. So higher time frame like 30, 1 hour, 2 hours, if you can go daily, if you want to swing trade, they are all perfect. You understand? So now the first thing you need to consider before this strategy, like, you need to find a resistance point. You need to find a point where the market always reject. Like, whenever the market comes to that zone, it's always reject. That's what we need to see first. So I'll advise you to look for double top or triple top. I'm sure we all know what double top is. Double top means when we have, okay, here, this, when we have two lows, you understand? This is a double bottom, you understand? Top means when it's high, you understand? So when we have two lows, this is a double bottom. When it's three, is what? A triple bottom. So I think we have three here. I think we have a triple bottom here. So this, when it's three like this, what is it called? A triple bottom. That's what it's been called. You understand? It's been called a triple bottom. So now, after you've gotten this, we need to now bring our trend line tools and wait for the market to break out from the trend. For example, this is a double bottom, so we are waiting for the market to break the upside. Understand? So this will be, let me make this color, let's make it purple. Since we have red here. Yeah, so like this, we are going to connect. Hope you guys are paying good attention. We are going to connect the double bottom or triple bottom with the trend line, the trend of the market. Then we wait for the breakout. What happened? The breakout happened here. You can see the breakout happened here. Then you won't enter after the breakout, though. You won't enter. When we will now add a moving average. What is that moving average? We're going to add the 50 exponential moving average. And if you notice, guys, most people, your textbooks or everything, they will give you this pattern that when you see something like this, you just enter for a long. No, there are some cases you might be stopped out. I'm going to show you. So I will show you why we added the moving average. So we added the 50 EMA. So now we only enter whenever the market breaks the trend line, then it also breaks the 50 moving average. So where will our entry will be here. And guys, this strategy has a very high risk reward, very high. The minimum I could find was like 1:4. But to be safe, like I told you, I assured you that if you can use this strategy, you are not going to blow your account. Is it profit? You're going to pass that profit and you're going to make profits. But the problem we have as traders is we don't know how to control our greed. Understand? It's a very huge problem. You need to be disciplined. So now I concluded that we should only take 1:3. If you're going to take 1:3, I can guarantee you your win rate will be 95%. 1:3. So let's see, 1:3. We enter a long here, 1:3. Put our stop loss. Your stop loss will be a couple of pips below that double bottom or double top or triple top or triple bottom. Understand? So when we go for what, 1:3, we will get more than that, but let's just not be greedy. We just want to take our little profit and leave the market. You know what really matters is how long you can survive. It's not how much money you can make today. The market will still be there tomorrow, next tomorrow, a weeks, like that. The market will still be there. So this was a winning trade. So let's look for more examples. So now this 50 moving average also help us to know that we already know. I think we should already know that if it's above, it's implies in an uptrend. If it's down, the trend is trying to change. So we are already in an uptrend, so that gives us direction. We know it's an uptrend. All right, now we already know that the moving average, when it's up, it's an uptrend. When it's down, it's in a downtrend. So that we know that, okay, when the market is below, we can now be looking for the sell side. You understand what I'm saying, guys? This is very, very easy and very, very profitable. You just need to pay attention and follow the rules. So let's see what we have here. So I think the market wants to reverse. Yes, the market has been struggling below here. So yeah. So now the market has reversed. So what do? We will start looking for. So one thing I want to tell you guys is this moving average help us to understand the market trend, but we already know that indicators were only created to help us in trading. They were not like the major basis. They were just there to just assist us when we have included market structure. Market structure is king any day, anytime. Market structure is king. So now what are we looking for? Our major objectives that we're looking for what? We are looking for a double bottom, double top, triple top, double top. Yeah. So did we get any? So now let me show you here. Let's be practical. Let me show you here. We got one here, boys. It didn't come. Let me show you. Because now we got the double top here, but we need it what? To break the trend line. You need it to break the trend line, and you can see, guys, you can see why I added the indicator. Now I told you, indicators is there to help us become more profitable. So people that don't know what indicators does, that will tell you indicators are bad. They are good when you use them with market structure. That's a bomb. The market doesn't have a choice. It just have to respect you and give you your money. It's your money, you understand? So now you see, if it would have been some traders to have gotten in for a short, but no, we only enter a short when the market is below the moving average. You understand what I'm saying? We'll enter for a short when the market is below the moving average. So guys, you know, it's just vice versa. If you are going for an uptrend, so if we have a double bottom, we'll be looking to buy. A double top, we'll be looking to sell. And before we can sell, you can see, before we can sell, the moving average, the market must break through that 50 moving average. So it never broke through here, so it's not a trade for us. So that's why I ignored it. So let's look for. So I think true, but you just need to find them, because you never know when it's going to break. Nobody understands the market. All what we are doing is just probabilities, you get. So I think we have a rejection here. And now the rejection can be 3, 4, 5, 6. I just use that double top and double bottom so that we can have just the mental picture. You just want to see a rejection on the market, then you draw your trend line to identify the trend. Then anytime you see a break from that trend, wait for a break from the 50 moving average, and you have your trade. So what happened here? Let's see. Our trend line, I think we got a break from here, then a break from the trend line here, from the moving average. So let's say we got in our short here. So where will our stop loss be? Our stop loss will be here. So that's it. Go for what? 1 ratio trade. Profit. You guys can see, easy. You see how the market fell? I told you guys, this strategy has a lot of potential, but don't just be greedy. So that's it for today, guys. If you want more videos like this, subscribe, like, and share this video, and watch my other videos, because I got some quality contents on this channel. So thank you. See you guys later.